Welcome, Kellogg community. I'm Michaela Doyle with the Kellogg School of Management. Thank you for joining us today for Conversations with Kellogg Leaders featuring Pedro Jereissati. In this webinar series, Dean Corneli speaks with Kellogg alumni leaders on timely issues and challenges facing the global business community. You can catch up on prior webinars in this series at our virtual events page on the Kellogg alumni website. We will put a link to that site into the chat now. Today's presentation will last 1 hour, and we invite you to submit questions for our speaker at any time using the Q&A icon that's located at the bottom of your screen. We will address audience questions throughout the conversation, and with that, I'm happy to welcome Dean Francesca Corneli.
Hello, everyone. Thank you so much for joining us today. As you know, this is one of my one of my favorite moments in my life as a dean, because this conversation with Kellogg leaders really showcase what is best at Kellogg and what amazing alumni we have. So I am so delighted this time to have another amazing alum, Pedro Jereissati, who is the chairman of Iguatemi, and he brings a wealth of experience in the world of retail, real estate, and investment, and is also heading a family business. And as you all know, Kellogg really is the place for family business. We had such a long tradition in that space. So welcome, Pedro. Thank you for joining us today.
Thank you. Thank you for the warm welcome. It's a pleasure to be here and be connected to the Kellogg community. Thank you.
So let me start, and let me remind to everybody, you can put the question in the chat. I have a lot of questions for you, Pedro. So let me start. As I mentioned, you come from a family business, and it's something we are always so interested in. And you tell the story of growing up playing bike in the parking lot of one of your family malls. Can you tell us a little bit, what was it? What does it mean to grow up in a family business?
Yeah, so first of all, the family business was my father is the first generation or a founder. Of course, his father or my grandfather, he had some assets, but it's not the assets that we have today. So my father would very much from the beginning, like the mix of the business and the family life was very much interconnected.
Mm.
So most of the weekends, like we were one of the first businesses that we had, which is an important business today, which is Iguatemi. It's a mall operator. And most of our weekends would be on the mall with him while he was working, and we were kind of playing. At this time, I was probably saying mid 80s, and I was about 6, 7, 8 years old. And I would go with my brothers, and our weekends we would try to have some fun at the mall, right? But not the regular fun with the family, but having fun running around. The malls were not that busy or that crowded at that time. And I think that's the first experience that we had with retail and real estate, right? So I remember early on that we were trying in the business, and my father saying, "Well, let's see if the mall is full, if crowded, if people is buying, right?" And you would get there and not count, understand that you did not have to count the number of people, but rather how many bags they were carrying or from which
Mm.
stores they were carrying, and understanding which stores were performing and not performing. And this bike story is true. Uh, I think I insisted so much with my father to have to get a bike that at the end of the day he said, "Okay, you're getting your bike." And it was late in the night, and he said, "But you're only we're only leaving once you learn how to ride this bike without the training wheels." And I was okay, but I wanted with the training wheels. So it's a story that I have 40 years ago, but it's something that it shows like the emotional connection that family businesses have to their properties and their businesses. And I think it's important to remind of that, not only for ourselves, but for the future generations, because it is important when you have a family business to have this connection, not only as a source of cash flow, but understanding what the businesses do and how you get involved and you have a long-term view and connection to those businesses.
That's so interesting. Since I joined Kellogg, I've been hearing more about the special value, the special dynamic of family businesses, and what you're saying, it's really very interesting. Now, let me talk a little. Well, I wanted to ask you a little bit more about that, what you learned from your father, but also I know he was interested in having you in the business, but had
Yeah.
a very strong ideas on how you should enter into this business. So can you tell us a little bit more,
Yeah.
starting from the bike all the way?
Yeah. As I said, I think he was very entrepreneurial and like a do-it-yourself approach and an approach of hard work and getting things done. Um, so he lost his father when he was 17, right? So he was like the oldest of six brothers, and so he had to take care of some of these assets, and he moved to São Paulo when he was 20 years old, and to really get into the business and see what he was going to do. So I think that kind of mentality, it was also always on us, like that responsibility and accountability. And I remember like the first images that I have is of him leaving around 4:30 or 5 a.m. in the morning to get to work. And this is something that hard work has always been like a value in the family. So I started working at the company when I was 18 years old, just when I got to university. It's not very common elsewhere, but here in Brazil, like I transferred college to the night period, and I would work during the day, right? So
Wow.
we would work from 8 to 6, and then from 6:37 to 11, we would go to university. And it's something that it was quite common here in Brazil. Now is less common, and because you have better quality of education and so on. So our idea was always like to get involved with the business and kind of learn with the business, learn by working and learning by doing. Of course, you would also have university, but it was always clear that at some point you would get, or we would have to be qualified in order to work in the business and to grow in the business. And the MBA was always something that it was a north, because you knew it, that you would need like a better quality education. So complementing these two worlds where you have like hands-on experience and then enhancing it and qualifying with a better education. And in my case, going to Kellogg in 2004, 2005, which was a great experience and very important to me.
So let's get to the thing of also if all the way to Kellogg, as you were saying, right? I understand you actually played a real big role in the telecom business that your family invested. And then while the business was growing, you left for Kellogg, like just in the middle of the nicest part.
Yeah, it was so by the late 90s, Brazil was through a major privatization program, telecom, mining, steel, energy, infrastructure as a whole. And we participated, and my father leading at that time in 98, we participated in acquiring one of the companies, one of the telecom companies that were being split and sold in parts, like the former state monopoly that was divided and sold. And for me it was a great experience because it was a company that it was a state monopoly, and because they were split, there was not a single company. It was like you were buying a bunch of operational states. Like if you would buy, there was not like an AT&T or Verizon. You would buy, let's say, Illinois and California, and of course there was a geographical sense. But you would have to structure all that. It was a company, so getting the processes in place, hiring top management, understanding strategy, market, finance, regulatory issues. So for me, it was a great experience, a very broad one. And of course, I think that's some of the good things about a family business is that you're able to get exposure to some issues and some discussions that otherwise in a corporation, let's say, if you're 21 or 22 years old, it's very hard for you to get that kind of senior discussions, exposure, or getting access to the board and to the C level and so on. So it was a very rich period for me in terms of experience. But as I mentioned before, it was always part of the program that at some point I would go for a better education, and the MBA was part of that program. And I remember when I left, or when I was deciding to go to the MBA, I was very much there was a conflict because I was saying, well, so many things are going on, and I'm just gonna miss the momentum, like everything is rolling and you're involved in everything, and
Yeah.
you're going to waste or spend a year or 2 years away. And it was amazing that when I came back, like 2 years later, it was all the same. Like I said, well, I should have stayed for 3 years. I mean, nothing changed. So that feeling that you would go away and miss the momentum, I said, when I came back, I said, well, like it was a great decision. But yeah, so that was how it happened. It was always a plan to complement the education and to have this MBA, and that was the right timing.
I love what you're saying because still today is people are always afraid to take a pause because they think but you're right, and that is a great time. So what did you learn about entrepreneurship at Kellogg? Did you focus on entrepreneur or be an entrepreneur or
Yeah, I think I think that most the time that I was at Kellogg, I think in terms of entrepreneurship, it was very important for me to understand that being an entrepreneur is not only like having ideas and going after it, but it's like combining that with a process, with a structured process where you really understand what you want to do, you criticize, you have an investment criteria and what you want to do and what you do not want to do. So combining this entrepreneurial feeling of getting things done, but with the structure and processes and understanding how to have an innovative culture and how do you drive innovation and how you lead other people into innovate. It's a process. So it was very important for me to understand the balance that you need to do both, not only good ideas, but having people to criticize, to understand, and to have a process in place to make sure that you have this entrepreneurial and innovative culture.
I love that because you're giving the perfect answer when people say, "What do you learn about being an entrepreneur at a business school?" And it's exactly what you're saying. There's so much about the process and how to set it in place that one can learn. But now talking about the process, right? A structured process, then you guided your family company's IPO as a chief financial officer. Tell us,
Yes.
coming to an IPO in Brazil at that time, how was it?
Yeah, I think Kellogg had a major role in that as well, and especially the period that I was in Kellogg and the chance that I had to think over the business and talk to my friends that I trusted, and friends in the Kellogg MBA. And it was quite clear for me that we had this telecom business where we saw no angle. It was an entrepreneurial opportunity, right, to
Mhm.
participate in a process, privatization process, like many countries had in the past. But going forward, I mean, there was no angle for us that would differentiate ourselves better or give us an advantage, competitive advantage over other players. So just for example, the telecom business is very capital intensive, and Brazil always high interest rates. and no availability of long-term funding. You would compete with companies at that time like Telefónica from Spain. Carlos Slim from Mexico was the richest man at that point out of Mexico. And it just made no sense, and very deep government regulations and obligations and so on. So once we were there, I was there, it was clear for me that this is not a business that I wanted to be involved in the long term, or that it didn't make sense for my family to be involved in the long run. And on the other hand, the real estate business had a lot of competitive advantages and angles that we could compete. We had some best locations. The market in Brazil was very fragmented, and we didn't have the capital. I mean, because there was no, like, the macroeconomic long-term funding in Brazil was not available. But there was like starting to be a window of opportunity of the capital markets developing. And that's when we saw a few companies getting public. I'm talking about 2005, 2006. And then I decided that when I came back, I would pitch that this was the best way forward. So even though before the MBA I was in the telecom business, right when I came back, I went to fill the role as a CFO of the real estate company, the Iguatemi malls, and take the company public in an IPO process. It was a very rich and interesting process. We were the first small company to get listed in Brazil. You had some home builders, but you didn't have a mall operator such as have like Simon in Simon Property Group, for example, in the US. So and the businesses are not they're similar, but they're not the same. And the dynamics of the mall industry in Brazil and the US and Asia and Europe, they're very different. So having to first structure the company to be a public company, right? And what you need to do in terms of governance, to organize the family and making sure that this is the right step, and to get everybody on board. That, I mean, it's no right or wrong. It's just a different situation. First you have a family business, and then you have a family business, but you have outside investors. So you have to get prepared and the governance in place to make those steps. And we did it. It was a highly successful IPO at the time. Like, it was 25 times oversubscribed at the top of the range. 70% of our investor base at the IPO were international investors, mostly from the US. So it was a great process. And for us, it's not the seed, or the seed is like 34 years ago, but it was like something that accelerated our growth. And we grew the company 20 times since we took the company public in 2007. So I mean, it really allowed us to grow and quality and have this high quality portfolio.
That's amazing. So you've been now working in Iguatemi for nearly 30 years. You're now the chairman. You just said there have been unprecedented growth. What was your favorite role in the company? You tried them all, maybe.
Uh, well, I think that right after this, right after the IPO, as a CFO, and I was responsible for new business as well.
Mm.
So it was a period of a lot of growth through M&A, through consolidation, and also through development of a few malls. And I think that was the funniest period, where, like, you were really trying to get these deals done and understanding the long-term strategy, and seeing that you were implementing on that long-term strategy. And also, I've been in the business for, as I mentioned, 30 years, and we have a lot of people with us that started, maybe some of them 30 years ago, but some of them like 20, 25 years ago, 20 years ago. And it's very nice to see those people growing with the company and assuming responsibilities as a C-level, as our current CEO. for example, has been with us for 15 years. It started as a general manager in one of the malls. So
Amazing.
this is a very rewarding experience to see these people grow with you. So probably these two things what gives me more pleasure. Yeah.
That's amazing what you're saying, right? It is typical, the family business, they have a particularly focus on their employees and the long-term relationship. But one of the things that at least I hear a lot is the focus at Kellogg is how also running a large family business can be challenging because you have both not only business dynamics but also family dynamics. How do you deal with those challenges?
Yeah. I think we learned. So we have, and I agree with you. It's a challenging environment. As I mentioned, there are great advantages of being a family business. As I just mentioned, like having the access to the discussions and the seniority that you get, or what you're able to learn and see. But at the same time, at dinner table, there's no like business or family. It's all about the same, right? So if you have a bad day at business and you get to your family at home, it's hard to differentiate. So what we learned, and we had this relationship with my father, who was the founder, and I also have two brothers that work with me in the business, right? And the first thing, I think we were kind of lucky that we have complementary skills, and where I went more into strategy and M&A and finance, my two brothers were older than me. They were more focused on the real estate fundamentals, right? Developing the properties, the architecture, the relationship with the tenants, the stores, operating and making sure that the public and our clients have the best experience when they get into a mall. So I would say this was kind of luck, even though my father, he kind of said, well, I think it's better if everyone has like an area of expertise to avoid like this overstepping someone. And but this was just the start. And what we learned is that communication is key, right? And not leaving issues grow, and not downplaying the importance of small issues in the family dynamics. So sometimes you think that families, and we in 2013 we hired, like, McKinsey was responsible for our whole family structure and governance. And it was amazing to see that when you go see all the examples of families that had problems or failed, or at some point had a problem within the family, it's usually not the large decisions such as an M&A or a strategic decision that gets the family apart. It's usually the small issues, right? So it's usually it sounds silly, but it's usually because someone is CEO and has 10 invitations to an event, and the other brother has none or has two, or because someone said something and it was not taken serious, that those things grow inside them. So of course this is anecdotal and small examples, but we learned very on that we had to be very transparent into communicating, and every issue that was kind of getting in our way in our relationship, trying to be frank and to understand, to being listened and to understand others' perspectives and try to get rid of that issue, but by speaking and communicating, and not just by putting aside, because once you put aside, they grow and they accumulate, and that becomes a problem. So I think this is something that it's very important, and we're very good at doing, and I really recommend the communication, and having a disciplined process of communicating, of a routine, of meeting, and sometimes with no agenda, but just to make sure that you have the opportunity to talk about issues, right?
It's amazing what you're talking because we always talk about, the approach to leadership, Kellogg, and so much of what you're talking about, transparency, communication, frankness, is exactly what we would like to advocate. So it's great to see a Kellogg alums talking about it as important values. Now, I want to ask you a little bit about not a little bit, but about the business of malls. I actually have a lot of question coming in all about the malls. And actually, there's also someone who wrote that I've spent a lot of time in Sao Paulo, enjoy your malls greatly. So clearly, so let me start, right? So shopping mall, and then I'll go to some of the question there, but I want to start with the beginning. Like shopping malls and shopping culture are different in Brazil than in the US. How did they compare when you started the company? How do they compare today?
Uh, I would say that the main difference for the first of all, and I don't know, I assume that a large percentage of the audience here is US based and of course some international, but the mall industry in Brazil is somewhat different from that in the US, especially in terms of fundamentals, or whereas in the US, you would mostly like have to drive to a mall. It was not like located downtown in the middle of the business district. So you'd have to get your car, go to drive like 15 or 20 minutes to a suburb. And you would have like only retail and department stores, like four or five department stores on each side of the mall and no quality restaurants or foods, more like a food court, but not like experience dining and whatever. In Brazil, they were kind of different. First, the malls, the cities were built around the malls, right? So maybe 30 or 40 years ago, some of them were not downtown located, but they became like a hub and the new centrality that drove growth. So these malls became very dense in their surroundings. And uh, at that time, when they were developed, you would not have only retail that would feel like local retailers that would fill the whole mall. So you'd have to combine the mixed use. So you would add by necessity, you would add offices, you would add residential, you would add restaurants, movie theaters, schools, and other uses so that people would not only go there to shop, they would go there. And we like to say when you go to our properties, you have to feel two missions. One is get things done. It's like people, you need to go there to buy something, like solve a problem, but also to enjoy life. So you have this solve your problems, but also the enjoyment of life, to see people, to go to a great dining experience, to go to a movie theater, to go to the theaters, to watch a play, to see people around, to go to events, parties. So the best restaurants. So this is a different dynamics, and most of the malls in Brazil or the high quality ones try to go after these fundamentals, which is not only based on retail. And you see now, not now, but in the last 10 years, the US also going this way and with a lot of redevelopment and putting other uses into those properties because they do not want to be just a transactional retail. So that's a basic difference in the fundamentals of the industry in Brazil and elsewhere.
Well, you seem to do it very well because in the meantime, there's another message here to say to tell you that the Christmas decoration is also impeccable. So I need to come and see it.
Yeah, I sent you a video that gave
Yeah,
you visited one of our malls when you were here in
yes, I loved
a
it.
few months ago. Yeah, we try to surprise our customers. And it's what I'm saying. It's not only come here to shop, but come here and see, bring your kids, not because, I mean, everybody's going to see the Christmas, right? But you have to be surprised. You have to be in awe. This is the way we think about it, like to over deliver and to make sure that our clients are in awe of what they see. They feel this special treatment because they know that we're not only doing something because we have to. We really want uh, to make them love what they're seeing.
Yes, I mean, your video talk is showing like the mall is a place where to come and slow down. It was
Yeah.
very nice. Now, I want to, and then I'll come to this question. I apologize to everybody, but one more thing I will say, because as Brazil has become more developed, you have changed your growth strategy. So can you talk a little bit about what you're aiming for with recent acquisitions?
Yeah. So what we saw in Brazil, and that dates back to the last 30 years or more, is that Brazil is very volatile. Uh, Political uncertainty. I mean, the world is becoming more and more volatile and political uncertain, but this is something that we've dealt with for the past 40 years. Interest rates going up, unemployment, like economic cycles, much more intense, for example, than in the US or Europe, where you would have like growth of 4 or 5%, and then you would have like 3 years of recession or interest rates at 15%. Current interest rates now in Brazil are 15%, right? So extremely high. And inflation is about 5. So real rates of around 10%, which is extremely high, and we're just starting a down movement, but probably at the end in 2 years is going to be at 10%, right? So what we learned is that we want to build our properties around the more resilient customers, and the more resilient customers uh, were the A and B classes, like the more affluent consumers in Brazil. And we saw an opportunity around 20, 25 years ago to start segmenting these properties and bringing like international brands and luxury, because we had some of the best locations. And we had not only the best locations, because other properties also had similar locations, but we had the locations, and we had the willingness to prepare those properties to get these kind of comments that we're getting, right? Where you see, like, we'll invest in architecture, we'll invest in content, we will invest in having the best brands, the best services, the best valet service. We are home to around 40 of the most important global luxury players in most of their malls. Usually in Brazil, we are maybe somewhat between 40 to 60% of their business in Brazil. And I'm talking about companies such as Hermes, Gucci brands, right? Hermes, Gucci, Louis Vuitton, Tiffany, um, Saint Laurent, and like the major global luxury players. We also operate in this same context, that we need to differentiate ourselves and bring to our clients things that surprise them. We also operate some brands. So, for example, Polo Ralph Lauren, Loewe, Birkenstock, right? The shoes,
Yeah.
which is not luxury in terms of positioning, but it's something that it's desired, and people just buy a lot. So you'll find that only in our malls, because we operate that in Brazil. So that creates that kind of differentiation that we have. Then we have stores, for example, Birkenstock at our malls in São Paulo. There are 3 malls that have Birkenstock. Then in the south, in Rio, in Brasilia, and that creates differentiation that drives traffic and customers, because they can find things they can only find in our properties. So this differentiation strategy is something that became key for us, it was not the easiest decision on a short-term based, because that involves a lot of investment and capex and making sure that Brazil will grow. and at some point the segmentation and the luxury market would be relevant, and this became a reality. So this is basically the idea that we had in segmenting and focusing on the high and the more affluent consumers.
That's very interesting. And like, there's a related question, and maybe it's exactly the same point. I don't know. It starts saying shopping Iguatemi is my favorite shopping mall in the world. So that is good. When building the business, how did you cope with the challenging conditions, what you were saying of Brazil when creating the mall, from high interest rates, limited suppliers in Brazil for luxury goods, complicated labor laws, and taxes, etc. It's a little bit on the same theme, but I don't know if you have something to
Yeah.
add.
No, I think that's why that's why the IPO was so important for us, because what we would do in the past, and my father, the way he started the business at first, he got into a business. He acquired Iguatemi. So Iguatemi São Paulo, which is the main shopping center in Brazil and the most productive. It's also the first one. Um, he acquired from an entrepreneur who got ahead of himself and got into financial trouble. So my father acquired his company for basically the debt, right? Assuming the debt and solving other issues that the previous owner had. That was in 78. So like the mall was 10 years old, and it was not a success because in the 70s it was just like, even in Brazil, people would just buy in the streets and so on. And then growth from 78 until 2008 or 2005, we had 8 malls, right? And we had a smaller stake in those malls because there was no long-term financing and funding available. So what you would do is that every 5 or 8 years, you would get a partner, just like a pension fund, who was the only like more long-term investor in Brazil, and he would buy like 50. He would be a partner with 50 or 60% of the mall when you would develop. And what we were able to do after the IPO, we were able to acquire some of our partners and grow our ownership in the malls, and then also buy, acquire, and develop new malls because we had access of funding. But the interest rates, they're still high, so it's a hurdle that we have to. That's why we have to go after properties that we understand have a great potential, and catering to this kind of affluent consumers is where we saw that maybe in the first 5 years you would not have the profitability that you would need, but once the property matures in 10, 15, 20 years, it would be like exponential in terms of growth and in terms of income. So that's the way we've done it.
Very interesting. There's another question here. It says, given your MBA at Kellogg and your career in Brazil, how do you balance global strategic frameworks with the local cultural market realities in Brazil when deciding investments or expansion?
Yeah, I think we're talking about, of course, about the mall business, and we have other businesses in which we also take into account what's happening in the global economy. Um, I think that what we see now is that we need to balance risk, and we try to we have a lot of operating businesses in Brazil, and we kind of balance our liquidity or the family's liquidity and portfolio outside of Brazil to kind of balance this geopolitical risk and this not only geopolitical risk, but the concentration risk of being in a country such as Brazil, where it's not as developed and less and more volatile. So I think that when we look as a portfolio, when we look into the mall business, we don't, of course, we take into account what's happening in trade, what's happening with the global brands. For example, now it's a moment when you talk about the main companies, right, in the luxury space, there's a lot of things going on, which is at this point kind of positive for Brazil. because if you talk about these big luxury businesses, companies, for example, China is kind of not growing as fast as they would like, or they opened so many stores. It's not like a growth avenue anymore. Of course, it's a very relevant market, but they want to be less dependent on that. Europe is already very much penetrated by these brands. Russia is also not a place where they are investing a lot anymore. So they look. The U.S. is also a place where there's opportunity still for those brands, because it has a lot of big and important markets. But Latin America became also a place where brands are focusing Mexico and Brazil and expanding those operations because they're performing well, and it's a place where they have room to grow. So, of course, this global perspective influences some of our decisions, but I think it's more important for us in terms of the portfolio of businesses than on each businesses and the strategies that we have for each of them.
That's very interesting. Here is a slightly different question, by the way. In your board experiences across sectors, retail, shopping centers, telecom, how have you seen digital transformation disrupt legacy business models, especially emerging disruptive tech like generative AI, and what leadership shifts are essential in that transition?
Yeah, I think it's a great question, and I've seen the disruption in business models. If you look, for example, the telecom business, when we acquired in the privatization process, it was a wireline business. So it's hard to imagine of a business that it's gone so a lot of disruption, right?
Yes.
Of course, it did not remain only of a fixed line operator. It opened like in the 2000s, like a wireless operator, which also became like a huge business. But you'd see it was kind of a monopoly, and then there were three or four wireless operators, and there were three or four cable operators, and then there were other digital and internet connections and broadband providers. And then it came Apple and Google and Amazon, that even though they were not in the infrastructure space, they were competing for the share of wallet of those clients. So people, and I think it's everywhere in the world, right? I mean, you're okay by paying $50 a month to Apple or Netflix or whatever, or a combination of them, but you don't feel good about paying like $50 to Verizon, which at the end of the day may give you the connectivity for you to enjoy all that. So we saw a lot of transformation. You have to be very active and open-minded. And the worst thing is to get the denial mode, right? I said, this is not going to happen. This is not going to work. It usually takes longer, but if it's a trend that you have to be open about and understand that it's going to get into your business. In the retail business or in the mall business that we have, also what we saw is that by differentiating ourselves and to be more high on luxury and fashion, you are less commoditized, right? So you have to and less transactional. That's why I said that our malls, they were all trying to become hub for the experience and the enjoyment and the lifestyle that you have, and have fun at the mall, and also buy. Of course, as a business model, it's important that you buy, and it's important the transaction and the retail. Of course, most part of the revenue comes from there. But it's by creating this recurrence where you visit the mall is that you increase your share of wallet with us. And if you just get commoditized, someone like just to buy a white t-shirt, they just can just go online and buy it anywhere. So I think all these shifts have been happening for the last 25, 30 years. And now I see AI coming as a new trend. And of course, it gets a lot of attention, and it's a powerful force. I think it's very new. Nobody knows exactly how we're going to take advantage of, or how you're going to be disrupted. But the main thing is that you have to be open about it, and you have to foster that your team and your management team and your people embrace that, and either to try to get them more productive or to understand what kind of business opportunities they will have by using those tools.
Amazing. Well, here I hear great conversation, which I agree, Pedro. I'm learning so much. It says, what would be your advice for someone who is starting a real estate development company by making a transition from the corporate world to an entrepreneurial world?
Is that in Brazil or outside Brazil? There's no
Well, the
information.
name sounds like could be Brazilian, but that doesn't.
Okay.
I was thinking the same while reading the thing. Let's
You
assume it's
know,
Brazil.
I think that what really happened, if that's the case in Brazil, but also mostly elsewhere, in Brazil, what happened that it's very good in the last 5 or 8
Oh,
years.
it's just enter. It's Mexico. Okay.
Okay, so I'm not very familiar with the Mexican market, but I think that the maybe like the line of thinking might apply is that it's much easier now to have access to good projects than it was in the past, right? So if you have good ideas, if you really work and put a lot of effort into finding good opportunities and understanding either market dynamics or some differentiation or financial structure or creativity, you're able to raise capital, right? Which has always been very true in the US. Like you have capital available, and I think it's a great strength of the American economy. You have capital available for good ideas and projects. It was not very much the reality in other places, and especially in Latin America. But for example, here in Brazil, you have like now these REITs, like the fundos imobiliários, which is like the same thing as the REITs. A lot of individuals putting money into it because you have like financial incentives or tax incentives and so on. So you created an opportunity and a pool of capital that wants good projects. So I would say it's a good timing. It's a good moment if you have, of course, you have to look into your own situation and understand what you're leaving behind and the financial security and so on. But if you're okay with taking this risk, I think that the conditions are there for you to succeed.
That's great. I mean, there's so many questions, but we are time is flying, and I wanted to ask you something completely different that you do because in addition to selling Gucci and luxury goods in your amazing malls, you also mill wheat to sell to people who bake bread in less developed part of the country. And that broadens your customer base and geographical reach. But I've also said that it gives you insight into the global economy. Can you tell us a little bit about this?
Yes. So this is the business that I'm very proud about. I'm also chairman of this business as well as the Iguatemi company, and this is a business that is based in the northeast of Brazil, which is the lower income part of the business, and it's where my family originally comes from, like the state of
Mhm.
Ceará, the city of Fortaleza in the northeast of Brazil. So you have like the south part, central and south part, where you have São Paulo, Rio, Brasília, like the main, like the largest markets. And you have like the upper part of Brazil, the north and northeast, from the Amazon to Bahia, to Ceará states, where you have large economies and important economies, but the general income and income per capita is much lower than that of the central and south. So this is a business where we buy wheat from Argentina, U.S., Canada, used to buy Russia, Ukraine, but mostly Argentinian wheat, processed into flour and sell it for bakeries, usually for bakeries to make bread, cake, pie, pastel, pão de queijo, whatever, local Brazilian food.
I have to come. I
And
love Brazilian food. I have to come back.
yeah, and it's very different from what we operate in the south, in the south, because it's not focused on the higher end consumer. It's rather focused on selling basic food in some of the country's less affluent areas. And having this balance, as I was talking about portfolio, gives us the ability to see what's happening in the luxury market or the affluent consumers, but also what's going with the general population, and you see the effect of inflation and how employment or unemployment is taking a toll on these consumers, or how uh, political programs or government programs either help or doesn't help some of these less fortunate consumers. So it's very important for us. And I remember maybe in 2008, where, for example, in this global trade, we have much more exposure in understanding like the global trade, what happened. Well, if the US is exporting less wheat, what happens to the rest of the world, and the increase in prices and the pricing dynamics. So it's, even though it's like a business in the northeast of Brazil, it's the one that you feel more the global impact of trade and policies, of global policies.
That's amazing. That's amazing. Let me ask you, there's so many questions I want to ask you, but going back also to your role as a chairman, how are you planning with the future? What trends do you focus on? The demographic, economic, trade, supply chain, consumer behavior, political, all of them. I don't know.
Oh, I think as a chairman, as you mentioned, or looking at the business,
Yes.
not on the detail side, but on a major decisions. I think that I see two trends, and especially in the mall business. The first one is what we call strengthening the portfolio and making sure that we have the best properties in the main markets, in the main markets. So currently we have 22 properties, 17 malls, 5 office towers, and we are expanding many of them and developing others. But the quality of the properties for us is much more important than the number of properties.
Mm.
So making sure, and these acquisitions just in the last 18 months, we bought about 4 billion reais in assets, which is around $800 million. We didn't buy them all. We brought partners, institutional partners as well, because we didn't want to take that much leverage.
Yeah.
So, and that comes to my second point. So the first one, as a chairman, I focus on quality of the portfolio and making sure we have the best properties. And the second one is that we do that, but not by increasing leverage to an unsustainable level, and which in Brazil is usually recommended that it's much lower than the US. So these are two things that we're very much focused on. And what I see that also is kind of different from the last 10 or 15 years is that geopolitical tensions have been playing a larger role than it used to be, at least in the last 15 or 20 years, right? Probably if you go 30 or 40 years ago, there was a lot of geopolitical tension. And then we had a period for 20 years or so that things were calmer. And now we're coming again to a more intense and kind of nervous environment. And even though this does not have an immediate impact in my business, or at least that I can foresee, it's something that it keeps you kind of up at night, because you don't really know what's going to happen next week, if there's some major thing that you didn't see it coming, because I don't know, US and China, or different places that are so powerful, and then you just spill over to what you have in Brazil. So this is something that we're kind of attentive to.
That's very important. And I want to go a full circle and come back. We started with your father and the Star family business. You have 5 children, I understand, not old enough to work yet, but
Yeah.
what are you doing to involve them in the business? I don't know if they also do the bike in the parking lot.
Yeah, no, they don't do the biking at the parking lot, or they didn't, but maybe. Yes, I have 5 kids, and people say, "Well, you're brave." I said, "I'm not brave. I just follow orders." Right? Uh, but yeah, and I love them, and it's just enjoy so much having them, and it's a blessing, a gift. My oldest one is 16, Louisa, and she just in July she spent 10 days working as an intern in the business just for 2 weeks during their vacation. And now, just today, in this afternoon, she's going to start again for another 10 days of internship. So the first time she went to marketing, and she was exposed to marketing. And the idea is not for her to, I mean, of course, she's there working, but it's just to get a sense of what is the business and how it operates, and to get some of the family members close to the business in a structured way, right? Of course, we're lucky that we're clients of our business, right? Because I mean, we also have the same needs as everyone. So we go to the mall, we buy things, we see things happening. But this is a chance for them to get closer to the business. And what we see, some of the families, like we talk to a lot of families in Brazil and large families with other businesses, and families had at some point they kind of protected the business from families like to implement governance, and some of these companies went way too far, and such as to alienate members and to distance the members from the businesses, and they're coming back. So the idea here is just to put a seed and see, look, this is this is the business. This is a family business. It's something that is important for your net worth or to take care of. And maybe you will get some connection with the business. And if you want to work in the business in the future, it will be great. You have to be qualified for it, right? I mean, you have to work hard and to get professional experience elsewhere. And then we have like a structured process to make sure that we have family members working in the business, but in a structured way. So yes, they're starting, but now things are more structured. We already had like McKinsey and other consulting firms at that time. Like the family is more structured than it was 30 years ago. But we try to keep that balance. Yeah, but just go there and do it as well. And have
I
this
like that. I
entrepreneurial
like it.
spirit. Yeah.
That's an amazing insight. Pedro, I cannot believe the time flew away. I still had so many questions, you have no idea. And there's question in the Q&A, but it's been so incredibly interesting. And people have been putting in messages how much they were enjoying the conversation. Thank you so much for spending time with us and talking about your insight. That's what I love of these conversations. I feel like I learned so much, and you come across as a true Kellogg leader. Thank you. Thank you
Okay.
so
Well,
much.
thank you very much. Thanks for having me and for inviting me to participate. It's a pleasure, and I think that looking back, I think I'm so grateful of the experience that I had at Kellogg. Not only the academic experience that I had, but the life experience that I had, and that made me grow. So it's a pleasure to have this conversation, and well, hope we can do it sometime in the future again or in another format. Thank you.
Definitely, definitely again. That is a promise. Thank you so much. And it's great that Kellogg is still in your heart. Thank you. Thank you so
Thank
much.
you. Bye
Bye,
bye.
everyone.